Hey everyone, today I want to talk to you about the headline making all the papers. Toronto, fastest growing city in North America. We dive into the stats and we find something interesting. Not only are we the fastest growing, but new home sales are down. What gives? Hey everyone, Alex Wilson here, team lead for alexjwilson.com. And of course we have Kyle Dovigi, Director of Operations for Remax Wealth Builders. Welcome to this week's weekly chat. So Kyle, what do you want to talk about today?
Well, we're going to be talking about Toronto and the growth of the city and surrounding area.
Yeah, and everyone's probably saw it in the news, made big headlines. Toronto is the fastest growing city in North America. And we've talked about the population growth and how it's a population center in Canada. But I wanted to dig down more into that top headline and why, as real estate investors or aspiring real estate investors, on the surface, it's good news. I'm going to dig down into why it's great news. Just when you follow my flow and train of thought, and everything I'm going to be talking about here, we reference in other videos, but it's a great summary video with that headline to go over. So if you read the article, you know, and I'm going to be reading from notes today, so I made another note so that my train of thought goes in the right direction. I don't get too off the highway. And Kyle, correct me if I do, which
I'll keep you
probably doing right now. So, Toronto, number one growing city in North America. And we had a net growth of over 77,000 people to the Toronto area. This is not the greater Toronto area. This is the Toronto area. The next city on the list in North America was Phoenix, which was hovering around a net growth of 25,000. So a significant growth level in the city of Toronto. And what this means is that we're seeing tremendous growth here in the city. And
to put it into comparison,
please.
You referenced the numbers, but Toronto's growing more than the next three cities on the list.
Yeah.
It's like exponential growth that's being experienced in the city and in the entire GTA. It's pretty amazing.
And when we go now to the GTA, so the net growth on the GTA level, if I just pull up the exact number here, it was...
Yeah, and the GTA was second on the list
overall. Yeah, which yeah. So we were our net growth in the GTA was 125,000, and Dallas, Fort Worth, Arlington was 132,000. But I dug into the statistics of where the growth is coming from, and this is really important to the continual sustainable growth of Toronto.
Because that's what everyone asks, right? If we keep growing, what's going to happen to the city?
Exactly.
Where are people coming from?
So if we look at the growth of the Fort Worth, Arlington, Dallas area, their growth was mostly in regards to baby making,
births from the population that exists there.
Exactly. Also through national migration, other Americans moving into that area. Canadians' immigration, so the majority of our immigration into the Toronto area was actually our international immigration coming into this area. And why that's relevant, if we go back, and we've talked about it before, Canada is an immigration-based country. The Toronto and GTA area, over 50% of the population was not born in Canada. We are the most multicultural city in the world. And government plans for immigration are to continue to increase. So in 2018, we took in 310,000 immigrants. They continue to grow that number. By 2021, they want to increase that number by 350,000. So what does that mean? That means the population of Toronto is going to keep on growing. And now they're forecasting for in 41 years, no, not 41 years. In 2041, not 41 years. In 2041, our population is going to go from the 2.7 million to 3.9 million in Toronto. This is not the GTA, in the Toronto population. So that is double the planned growth that current city planning and everything has in place. So significant growth in the Toronto area. So the next question you may have is, well, where are all those people going to work, Alex? Well, we've talked about it before. The Greater Toronto Area is responsible for 20% of GDP for all of Canada. The majority of the economic output happens here, very much like London, England. So that means we're attracting the companies who are going to want to open shops here because we have the population and therefore they have the workers that are needed for these jobs. And those cranes that you see in the downtown core aren't just cranes for condos, they're cranes for office towers too. Not only are we the fastest growing city in North America, we also have the lowest commercial vacancy rate for office space. So our vacancy rate is 3.8% in the Greater Toronto Area and a staggeringly low 1.1% in the downtown core. 1.1%. A healthy market is 9.5% vacancy. Literally bursting at the seams in regards to office space. There is not enough space in Toronto for companies to continue to open those offices, and that's why we see significant commercial construction downtown. We have the CIBC Tower, Ontario Teachers' Pension Plans moving downtown, other buildings going in. We'll do video next week. We'll talk about all the commercial development.
Yeah, I think it's timely.
So next week we'll talk about all the commercial development happening downtown, so we can show you where these 77,000 people net growth are going to live, 125,000 in the Greater Toronto Area. Okay, so we've talked about that we are the fastest growing city, significant net population growth. We've talked about the fact that immigration will continue to increase in Canada. So we're increasing the number of people coming into Canada, and we know that the majority of those people end up in the Greater Toronto Area. So that means our population growth is going to continue, it's going to sustain. We've talked about now that our office vacancy rate is staggeringly low downtown, 1.1%, and 3.8% in the Greater Toronto Area, which has spurred significant office development. We do know that we are a hot bed for new tech companies that are starting up here because of our young talent, because of the immigration talent that we're bringing in, and we'll talk more about that in next week's video.
And to put it into a bit of perspective as well, the Toronto area actually had more tech jobs than the San Francisco Bay Area did.
Oh, you know what? Let's make a reference point. You know what? We're going to take a little detour because Kyle brought this up. So San Francisco relating to tech jobs. So Kyle, your wife is not in tech, but your wife is in pharmaceuticals, right? And your wife's company head office is in San Francisco. Bay Area.
One of the offices, yes, they have a subsidiary there.
What was your wife's role before her role currently? It was U.S. regulations.
Yes.
So she was in charge of
U.S.
FDA. Yes, U.S. regulations for a pharmaceutical company that their North American head office was in the San Francisco area. But she was headquartered here in the Greater Toronto Area. And why was that, Kyle?
Well, affordability for the company, because people in San Francisco and the Bay Area, the salaries are incredibly high and they're being paid in US dollars. So if you come to Toronto or Canada, then the salaries may be, an equivalent rate, but they're being paid in Canadian dollars. And right now the Canadian dollar is significantly less than the American dollar. So it's a significant cost savings to the organization, but you're still getting the highly skilled, highly educated workforce.
Ding, ding, ding. Okay, so just want to take that little detour there. This is why companies are employing in Canada. They get a talent level, equivalent talent level, but a discount on the price based on, and it's not only just in regards to the lower salary. The benefits cost is quite low as well because of our universal health care plan. Companies don't have to subsidize that. Well, there are benefits plans here in Canada, but not like in the US where it's private healthcare and people's choices for jobs are based on the healthcare plans their companies provide, which are a significant expense to those companies as well. So a little sidetrack there. That's why we have companies that want to headquarter in Canada. same talent, but at a much lower rate. So population growth is growing. High-paying jobs are growing. But then we go into housing. So if population's growing and jobs are growing, then wouldn't we expect new home sales to be growing?
You would think.
Well, they're not. They are not. So increasing population, increasing jobs to employ that population, but new home sales are decreasing. Now, significantly on the low-rise side, but I'm just going to focus in on the condo side because we support condo investments. So new home sales of low-rise property significantly down. I'm not even going to 50, 60, 70% down. But I'm just going to go to condo. So in 2018, high-rise sales overall were down 38%. 38% over 2017. And 4% lower than the 10-year moving average. So that means 2018 sales were less, 38% less than 2017, and 4% lower than the moving average over the last 10 years. So we talked about 77,000 net growth in population in 2018, but less sales than 2017, is significantly less. But it was a big bump in 2017, big spike-wise, but still over the 10-year moving average, we are still 4% lower. And year-to-date now, we are trending 11% lower for new high-rise condo sales over the 10-year moving average. So we're looking at, again, highlighting again, net population growth, net job growth, fewer home sales, home completions are down. So literally supply and demand, we are not building enough homes for the people to move in. Now, actually, let me pick up my phone again because I did make a note going, well, Alex, why, that seems like a great opportunity. Build more homes.
Yeah, if I was a builder, naturally I'd want to jump in.
Yes. So the Atlas report, where we had getting this information from, they spoke to their developer contacts. More than half of the developer respondents in each major region cited project cost escalation as being among their biggest challenges, with trade and labor shortages also cited as a concern for many developers, particularly in Ontario and Quebec. So we have rapid cost acceleration in the new home field, and builders are finding that's difficult for them. And I know that builders are holding back projects wise because they know at the price points that they need to sell them at, so their replacement cost wise are significantly higher than what the resale market is. So they can't those will be they'll have difficulty absorbing those projects into the market because they literally can't build them for any less. And then on top of that, the significant red tape that builders have to go through within the greater Toronto area, which we've highlighted before, which is making the news now. And if you talk to any builder wise and you talk to what they have to go through at City Hall to get a building approved, it is an atrocious and drawn out situation, which is adding to the bottom line to what it costs you to buy one of these homes. So what does this all mean? Prices are going to go up. And
it's the unfortunate reality of the situation.
That's the reality. Right? Yep. And so whether you're a current investor that has a portfolio or an aspiring investor, there is still opportunity and the value in the market for prices to go up based on this information. And we're going to dig down tomorrow in regards to talking about the jobs wise, talking about the high paying job wise, and talking about the new office construction that's going to employ these individuals. And these are the individuals that are going to be paying the rent to live in the investment condos that you're purchasing. So thank you for joining our chat today. Hope we provided some insight and we can help you. We'll book a consultation. We'll help you build financial freedom, generational wealth. And what else will we do, Cal? Anything else?
We'll help them through the entire process.
And we'll have a good time about it. Okay? Thanks, guys. Bye-bye.